Hey, hello, everyone. I'll be with you shortly. Thank you for being here. Hope you all had a pleasant weekend. And we'll get started just a bit. We're going to be going over what a few pundits had to say with Jay Powell's remarks as he had his testimony talking about transitory inflation. And we'll be going over a couple recent interviews, some David Morgan clips, and then we'll go over some Francis Hunt clips. He had some pretty interesting things to say from our metal money segments. So we'll go over a few of these things, and of course, we'll always go over what's on your mind in the comment section. So do comment, and our ebook giveaway is going to be Dr. Ron Paul's and the Fed. So hope you folks studied up and take a look at the or had a chance to watch the David Morgan interview because the answer will come from there. So I'll see you folks in just a bit. And let me know how the audio is coming in for you. I understand that it was a bit soft the last few times, so hopefully this time it's a bit louder. And I'll be with you in just a bit. Thanks again for being here. Hello again, everyone. Excuse me. Hello again, everyone. Welcome to another edition of Silver Bullion Television, SBTV. I am your host, Patrick Vieira, and this is our weekly live stream Sunday night, whether you're in the Western Hemisphere or Monday morning if you're in the Eastern Hemisphere. Thank you for joining us. Appreciate you all being here. Let me go through a quick roll call. See who's out there. Michael Sayre, how you doing? How are things on Twitter? Owen May, first time I've seen you here. Welcome aboard again. If this is your first time here, or if you haven't already done so, I mean, please do sign up and all of that. But go ahead and type in new and where you're from, and we'll see if we can acknowledge you. So again, appreciate it. American Rebel 27, how you doing? Chris Primer, Pablo Pina, Stalwarts here, Butch Michael. It's been a while. Thank you, Butch, for returning. Lieutenant Colonel, how you doing, sir? Tweety Bird, the MiG 26. How you doing? Jay Hike. First time I've seen your name here also. Welcome aboard. Let's see. Owen May. Yes. Even the sun is transitory. Now think about it. Sun has been here pretty much forever. So we'll see how transitory is going to be defined. James Richter again. Let's see who else is out here. Patrick Bateman. How you doing? Greetings and salutations to you as well. Jay, how you doing, Jay? Let's see, Bill Wood, Tampa. How you doing out there in Tampa? Michael Sayre. Oh, saying hello to Pablo. Okay, let's see what else is out there. Just doing a quick roll call. Mutant Ref, how you doing? Mr. Nguyen, how are you doing? Also, Paul, Rob, Will. Few new names here. So again, appreciate you all being here. Jr. Hello from Melbourne, Australia. Heard things are getting kind of tough again in the land down under. So hope things are going okay for you, though. Again, thanks for being here. So having said all that, again, if you are new here, go ahead and sign up. Hit that bell to be notified on updates and give us a thumbs up. We really do appreciate the thumbs up. And yeah, hope we do see more subscribers. That's always good as well. You can always find us on social media. Silverbullion.com.sg is where you can find us on the web. Silver Bullion is our company. We do sell precious metals, gold, silver, platinum, palladium, nickel, things like that. And we also store. We do store precious metals. And more than that, as I've always said, we do specialize in wealth protection, systemic wealth protection. And as always, week in and week out, you guys out there, you know what's going on. Give us a call, shoot us an email, see what we can do for you. If you're just getting into silver and gold, are you hearing about things that are going on, or you may not be trusting what you're being told? Likewise, go ahead and send us an email, sales@silverbullion.com.sg, and we'll talk you through it. You know, we'll walk you through it, and we'll see what options that we have for you, because options are gravely important right now. Silver Bullion SG is where you can find us on Facebook. Silver Bullion PL for Private Limited is where you can find us on Twitter. Instagram, Silver Bullion SG. Audio versions, bit.ly, SBTV iTunes, or SBTV Spotify. And Crisis Tracker. Download that Telegram app, or if you already have it for your mobile phone or desktop, go ahead and search Crisis Tracker, one word, and you'll find our group here, which is growing. And we do go ahead and post 2, 3 items a day as it pertains to gold, silver, finance, economics, things like that. So we, again, as I say, we kind of help you sift through the weeds and just kind of see what's important out there or what may be important to you that's out there. So again, welcome everyone. Thank you all for being here. Jay Delaney. Let's see who else is out there. Belly Dance Rabia. Okay. Tom Bell. Hello from Detroit. Hope things are going okay in Detroit. Let's see. Okay, so a lot of familiar names, some new names. Appreciate that. Shane Lim. First time I've seen your name here as well. Welcome aboard. Vero Beach, Florida. Nice place. What I'm told anyway. Haven't had a chance to go there, but I understand it's a pretty nice place. R Canyon, how you doing? Trevor, Perth, Washington, or Western Australia. One of the two. One of the two. One of the two. My mind might be transitory this morning until my coffee settles in. So I'm pretty sure it'll be one of the two, though. Let's see what else is out there, or who else is out there. 49 Fine, how you doing? Okay, so I think we're caught up there. Peter Schultz, how are you doing as well? So having said all that, our upcoming guest, you folks probably are already familiar with who she is. She is Lynette Zhang. And she's been a banker, stockbroker, and studied world currencies since 1987. You folks know her as having that ITM trading channel on YouTube as well as the website. And she believes strongly that we need to be as independent as possible. And at the same time, we need to come together as a community in order to survive and thrive through hyperinflation. Her motto is food, water, energy, security, community, barter, ability, and wealth preservation. So I do hope that you folks will join us this week for Lynette Zhang. So go ahead and as I said, go ahead and subscribe so you'll be notified when this interview does come out. Looking forward to that chat with Lynette. And as always, we want to thank you for being here and supporting us. Our ebook, thank you. Where this week we're going to be giving away Dr. Ron Powell's book, End the Fed. Now, most people think of the Fed as an indispensable institution without which the country's economy could not properly function. But in End the Fed, Ron Paul draws on American history, economics, and fascinating stories from his own long political life to argue that the Fed is both corrupt and unconstitutional. It is inflating currency. We're well aware of this. Inflating currency today at nearly a Weimar or Zimbabwe level, a practice that threatens to put us into an inflationary depression where $100 bills are worthless. So I do hope you participate and take a crack at getting Dr. Ron Paul's ebook from Kindle. Download the Kindle app from your phone or tablet's app store and be one of the first 5 to answer correctly in this live stream before the timer runs out. You're going to have about a minute and 30 seconds or so. U.S. winners will be given a link to download the ebook. Winners outside the U.S., you'll have to arrange for an alternative prize with Amazon, such as perhaps a gift card. And you're going to have to provide us an email during this live stream. And what will happen is my colleague Vincent, hello, Vincent. Good morning. How are you doing? My colleague Vincent is standing by, and he will go ahead and mute your comments so that way you can go ahead and just put your email in there and only your email, and that way only he will see it and everything will be all good. Nobody else will see your email except for us. So having said all that, the question is going to come from David Morgan's interview. So hope you had a chance to watch it. Pablo Pina, Lynette said she loves, you know what, we love her. I mean, Lynette, she's going to tell you straight. She has I'd say she has a good heart. She genuinely cares. She genuinely cares about what's going on. Genuinely cares about the people she comes across. So she she's a treasure. Lynette's she's a good person. So having said all that, it is going to come from the David Morgan interview. So again, hope you had a chance to watch it. And the question, the question from David Morgan's, or the question that we're going to ask for the ebook that comes from David Morgan's interview last week is, according to David Morgan, the silver market is really a blank market. Silver market is really a blank market. So go ahead and take your best guess. Who knows? You may get it right, and then you may get a Kindle ebook on your way. Dr. Ron Pauls and the Fed. So according to David Morgan, the silver market is really a blank market. Hey, go ahead and take a shot. You never know. Okay, so let's see. Yes, Tweety Bird, I like her also. She's again, she's a treasure. She's true. She's genuine. Okay, so go ahead, take your best shot out there, and we'll see what we have. Let's see. I see paper industrial casino. That is true. It is. There does seem to be a casino manipulated. James Richter paper. Jay Delaney manipulated. Eugene paper. Michael Sayer taking a second stab at it. Industrial. That's the way to do it. Keep taking a poke. You never know. Silver Warrior paper. Who else is out there? Bill Wood blank. Jack Roth rigged. Manipulated. James Richter paper casino. What else? Shane Lim manipulated. Paul paper. Paul just in time. It is a paper market. Absolutely. David Morgan, in his opinion, his estimation, it has become a paper market. So taking a look at the 1, 2, 3, 4, 5 people who got there. James Richter, paper. Eugene N, paper. Paul, paper. Silver Warrior, paper. And Michael Sayer taking 2 stabs at it. Actually got it right the first time around. Also paper. So congratulations to all the winners out there. And let's go ahead and revisit that clip or that interview with David Morgan and see what he had to say.
I really don't think there's a silver shortage yet. I mean, the silver market is a derivatives market. I mean, it's really a paper market. Is there physical commercial bars on the COMEX? Of course there are, but all bars don't travel through the COMEX. I mean, a lot of silver that's used, especially in industry and even at the higher dealer inventory level, comes direct from the refiner to the user. It never touches the COMEX. And that's the vast majority of it. I mean, if you look at 850 million ounces a year mined, and you look at what the inventory is on the COMEX, you're going to see that they don't match. You've got 100 million ounces, rough number, in the registered categories, which all the dealers own. They might have a little bit of eligible, but generally speaking, they don't. And then you've got all that silver that's produced every year. So where does it go? Well, it goes to industrial users and investors. Of course, the COMEX is extremely important. I'm not trying to state that it isn't. What I'm trying to convey is that silver is a derivatives market, and they have just enough silver, or maybe a little more, that they require to make good on the deliveries that they choose to deliver upon.
That they choose to deliver on. David Morgan, glad we had a chance to talk with him. And I do hope you had a chance to go ahead and take a look at that interview. Now, it does seem that obviously the paper market does control the physical market. I mean, if you watch I believe it may be Monday Metal Money segments for you, that's what a lot of the traders say as well, that the paper markets do control the physical markets. And if you watch the interview with David Morgan, I also asked him, who is first in line at the mine to get silver? I mean, it's something we don't think about, right? There are people, state actors, governments, whatever it may be, companies, they're the first in line. And, so I had asked him who is the first in line. So I do hope you had a chance to watch that recent David Morgan interview, because a lot of you guys out there may be thinking that, from the mine, it goes directly to a refiner or mint. I mean, in some cases it does, but it also goes to different places. There are a lot of hands out there that are out there at the mines. So it's something that we don't think about that much, but it is true. Another clip from David Morgan.
I think it's a precursor to the UBI, Universal Basic Income. And I think they're softening up the populace with the idea that you really don't have to work a living. You can just sit there and we'll give you a basic income for doing nothing. And that's my take. You asked me my opinion. It's a strong one. I believe that's what they're doing. You may see fits and spurts, and then they start some kind of infrastructure program and have all kinds of government jobs and all that. But on aggregate, in the bigger picture, it's going to be a UBI. I'm almost certain.
Okay, and so that's when we were talking about the economy and how things are going. And Jack Roth, maybe for a little laugh, I'll go ahead and put this in there. The employees are the first in line. All right. Okay, Jack. All right. Got to watch out who we hire nowadays. We'll be looking to see if you send in any applications. Gonna have to look at it twice. Anyway, UBI. In my mind, I've always felt that the government would create a lot of infrastructure jobs. I mean, they've always talked about it. Even home building jobs, building new homes, communities, subdivisions, whatever it might be, and that they might hold back on UBI, where they would try and get everyone employed first before they went to the UBI route. However, it does seem we are on the path for UBI, as David said. And what will that mean to a country? What would that mean to a country if it goes the UBI road, where the greatest asset any country could have is its people and their ingenuity, and especially when it comes to, I mean, almost any country. What will happen if you go the UBI route, and guys will sit home and take the money? Government's going to pay them, and what happens to your ingenuity? And that plays a very, very important role in a country's development. So I'll take a look at a few comments to see what you folks are saying. Um, let's see. Robbins, the Bill, haven't seen you in a while. How you doing, my friend? This is actually almost entertaining watching them try to manipulate the public. Robin, I'd have to agree with that. I mean, the way things are going. And I've said this before. If they couldn't take the punch bowl away from Wall Street, what makes them think they can take the punch bowl away from Main Street? And we'll touch on that in just a minute. But that's so they're a great point out there. So let me take a look at one more clip from David Morgan, and then we'll move on.
I really believe somebody's short at that level or near that level, and they have to defend it until they can unwind their positions. That's as simple as I can make it. Am I right or wrong? I cannot prove it, but boy, I've never can recall where they've defended, that line in the sand, so to speak, with such vigor. I mean, even when the CFTC interim, I think, chairman said we got to tamp down the silver market. I think those were his exact words, something at least similar to that. Are you kidding me? That derivatives market is as poorly as it's run, in my opinion, because there's a lot of things that go on there. You wouldn't want to be an official making a statement like that, in my strong opinion. I mean, this almost guarantees to the general public that something isn't right in the silver market.
Something isn't right in the market, right? We all wonder. But have you all noticed that $28 price level does seem to be a sort of a line in the sand, as David had described it? And that statement about tamping down silver coming from the CFTC, what does it mean to you? You see a price that it just cannot seem to consistently close at, and you have the CFTC saying we needed to tamp it down. I mean, what's really going on, right? I mean, how do you take that statement? How do you take those two statements? I should say. So while you're thinking about that, I want to play you another clip on why 28. Here's another opinion on why 28 coming from our Metal Money segment with Francis Hunt. Last year was a great year for both metals, in particular gold hitting all-time highs, and since then both metals have pulled back somewhat, but silver seemingly more resilient than gold, yet unable to hold that $28 price target. Are you seeing anything in your technical analysis where a precious metals consolidation is happening for an upward move?
Yes. So, Patrick, good question. The $28 has significance for a number of reasons. It was the floor very much during the previous highs of a great descending triangle. So I will show that to you technically if we just pivot to a share screen to capture the events of 2011 that gave the high up to 49. What many people might not recognize, and I'll just do a quick overlay draw here in bright transient pink, is that there was a sort of floor that occurred in and around there at that 28 number. This was what we typically call technically a descending triangle. So again, those tops were getting capped and sold off down, and you had a flat bottom floor, which you held for a while before eventually that relented, and we went into a medium to long-term bear or pullback in a macro bull, depending on your time frame. And as a result, we're now bumping up against that on the way back up, which is encouraging because it's the beginning of a recovery on your macro time frame. But the 28 has proven a little bit of a stern resistance for now. A lot of it will have to do with a combination of gold's progress. Silver was more resilient during the pullback, but it's important to highlight, as many will know, that gold actually made a new high while silver got on its bike a lot lower. And the big aspect here was the super low that was smashed out around about the $11 during the events of the pandemic. We of course, pivoted to a very strong gold bull at that point and an oil short, because we do a lot of cross-market analysis across a number of things. In fact, I've got a couple of charts, we're quite visual, that I'll be showing you shortly in terms of all of that. So whilst the short term, there's clearly some degree of resistance, and you could even have a poke below this line for a little bit, I think silver is setting up to catch up.
All right. So silver is, excuse me, setting up to catch up. Let's hope so. I mean, silver has been in a, wow, it's been a really, really rough go for silver. We have seen gold hit all-time highs, make new all-time highs, and silver just barely went over 50% of its all-time high. So, we'll have to see how silver is going to play out. I am one that believes that silver will absolutely have that slingshot, no question in my mind. So that was Francis Hunt. He did have a few other positive things to say about silver, and one of them was extremely positive. So I'll go ahead and play another clip from Francis Hunt.
All my optimism I'm going to give the people are more on the medium and long term. Can I say, the bigger the move to the upside on the gold-silver ratio, the greater the subsequent reaction to the downside. And I wouldn't put it past the possibility, this is someone who said you might get single-digit oil. You could just make a dip under the 10 and get a single-digit gold-silver ratio if we had the fullness of the move was allowed to play out. And if you hold the long term, this could be very, very beneficial. And often the suppression to the downside will cause a mania, hyper emotion, and you could actually get single-digit gold-silver ratio, which could see, quite big numbers, triple digits for silver and gold, safely 3, 4, 5, and beyond.
Now that was the statement. You could see single-digit silver to gold ratio. I know a lot of you guys out there are going to be happy for that. If that makes you happy, throw in a thumbs up. That one makes me happy for sure. Francis also did say patience of a monk, and absolutely, patience of a monk. What do you think of single-digit silver to gold ratio? Is it possible? Do you think something like this is possible? I know anything is possible, but should this happen, I think there would be a lot of things going on in the world, and I think you would definitely be in a better position to handle these things that may be coming your way. Now, one more clip I want to go over. Now, I know a lot of you don't believe in technical analysis, and I was one of them. I admit that. I'm even on the record myself as saying when you put bad data in, you're going to get a bad result. However, I want to show you this clip, one more clip from Francis Hunt in our chat with something he had to say about, does technical analysis really mean anything in a manipulated market? 50-year chart definitely did show a lot, but within that I suppose you're saying that there may be some funny stuff going on, and if there is, how does then a chartist account for these things that go on in order to call a probability?
Absolutely. It's a good question. And many people that think they debunk the notion of following the money through charts will make the following statement. It's all manipulated, therefore, your chart is meaningless. You're reading riddles and tea leaves in the sand type narrative. I want to just take those that think that up very, very clearly up. All participants are captured in the market, including central banks and any other participants. So we can highlight multitude of events where we have traded with or against what turned out to be central bank activity. I mentioned to you prior to this, the Euro Swiss franc collapse in 2009 that preceded the Greek crisis and all the European banks. We shorted at 150. We could see exceedingly low volatility kept being drawn down to this level. That was a soft, unannounced floor that they were trying to hold. Already, Germans were moving money off out of euros into Swiss banks, Italians, etc., and there were flows. And they were trying to stem that tide. You can see it, and the central bank was holding a line. They created an unnatural wall on the beach, which inevitably sees sand stack up against it, and inevitably you don't hold back the tide. We shorted that right down to below 1. They then came in and put in a known where they spoke about it and said, we will intervene. In fact, they already were. We could see that price behavior. So all actors show up in price behavior, including ones that some people would consider nefarious or black hat actors or gray hat actors, not traditional price discovery mechanism actors. So all actors are captured in price movements. Insiders, central banks, all the participation is there, plus volume. So charting is actually the forensic detective.
Charting is the forensic detective, is what he had to say, and I'd agree with that. I think he's right. I have to reconcile my disregard for charting, where yes, if I'm going to argue that the data input is bad because of manipulations, then all that, it is baked in. And when you chart, you are charting with all those things that are going to be accounted for. And not on the interview, what Francis and I talked about was, he did grow up in South Africa, and the way he kind of put it, don't quote me on this. Think of a tracker. Okay, think of a tracker who's tracking a lion. You see his paw print in the ground, in the dirt, whatever it is. If it's a deep paw print, perhaps it's a big lion, whatever it is. If let's say if you see other footprints in there, then you may want to think, okay, well, you're tracking this line, but you're seeing other players, other actors that are coming into your tracking, and with those you may see different, again, footprints, paw prints, whatever it is, and you may start to make reasonably educated conclusions that, okay, the lion may be nearby because there are other animals that have crossed this path. So this is a place where other animals come around. So the animal may, or the lion may still be around. So, I mean, not exactly in these words, but he kind of put it where when you do technical analysis, all of these things are baked in, even the manipulation. So he did have a good point there. Moving on, Gerald Celente, he's always out there for all of us, and he does have his popular trends journal, which we do subscribe to, and I want to go over a few things that I found in his trends journal. 4 things really quick: inflation, gold, silver, and the USD, oil, and Bitcoin. So from Gerald Celente's most current trends journal, inflation surged at its fastest pace in nearly 13 years. We all know this. And the U.S. Labor Department reported the consumer price index spiked 5.4%. The core CPI, which excludes, we've gone over this before, excludes food and energy, the 2 things that you and I use and consume and replenish every day, had its sharpest increase since 1991, rising 4.5%. And the estimates were for a 3.8% increase. And on a monthly basis, the headline and core prices rose 0.9% compared to the street's 0.5% estimate. So by all accounts, inflation is on the rise. And the government's inflation numbers are artificially rigged lower since they want to keep interest rates low to keep the equity markets high And because the lower the CPI number, the less they have to pay Social Security benefits, which are tied to the Consumer Price Index. So that's a pretty good point there. However, according to the June shadow stats alternate CPI measure, real inflation hit 13.38%, which they noted is a 41-year peak. Gold, silver, and the dollar, despite the government's rising inflation report of consumer prices reaching a 13-year high, which is bullish for gold and silver, both precious metals were basically flat because the dollar gained strength. However, the strong dollar is not because of exceptional U.S. economic growth. This is something we have to keep in mind. It's not because of U.S. economic growth, but because of other debt to GDP ratios are much higher. Okay, a lot of debt out there. It's not just the U.S., it's all over. Oil. While the deal pitting Saudi Arabia against the United Arab Emirates are on whether or not to increase oil output has stalled, the Delta variant hysteria spreading and more nations taking lockdown measures as detailed in this current trend, the OPEC Plus gang will reach a deal that will keep oil prices from deeply sliding. In other words, there's going to be support for that black gold. And we know what higher oil prices mean. And Bitcoin trading volumes plunged over 40% in June. Combination of measures governments have been taking to bring down the crypto market and negative reports by former big investors such as Tesla's Elon Musk have deflated the once soaring cryptocurrency sector. Volumes plunged in June on pretty much every exchange. However, overall volumes are still magnitudes greater than they were 1 year ago today. So according to Crypto Compare, Bitcoin, which had spiked at 64,000 per coin this year, hit a monthly low of 28,908 in June. And it should be noted that our breakout point for Bitcoin to deeply plunge is around 25,000 per coin. So those were some of the things from Gerald Celente's Trends Journal. David Morgan's recent interview, Francis Hunt's recent interview on Metal Money. So I do hope you folks have a chance to go back and take a look at it, especially if you haven't had a chance to do so already. So let me take a look at a few comments here. Let's see. Yeah, Manuel De Jesus, Gerald's energy is pretty. Gerald's great. I think we're gonna have him on soon. So it'll be good to talk to Gerald again and touch bases with him. But okay, so moving on to our website, silverbullion.com.sg. Let's take a quick look at silver price. I mean, I know I've been going on and on and on here. Thanks for hanging in there. Let's see, silver measured in US dollars, 25.74. Basically, no change. I believe it was up a little this morning here in Asia, and it's kind of retreated, I guess. Gold, 1816, not much movement as well. Nickel, 18,908 per ton. Again, nickel is doing fairly well. It is one of the key components used in electric vehicle batteries, and this is why we're seeing a surge in nickel prices. Investor kit, it is free. Silver bullion storage account, this is free as well. You can sign up for it. Again, we are going to need options. Go ahead and sign up for it. There's no charge and there's no maintenance fee to keep that account open. Peer-to-peer loan rates, let's see. Yeah, this is, we'll touch on this in just a bit. Borrowing request, there was one for 3.25%, lending offer 2.75%. We'll go ahead and take a look at this and explain it in just a bit. Silver to gold ratio, as Francis Hunt spoke about, here we are right at about that 70 level. We've been bouncing around 65, 70, around there. What it means is it takes about 70 ounces of silver to equal 1 ounce of gold price-wise. And this is something that it is telling us right now it is the time to buy silver. If you're on a fence, should you buy silver? Should you buy gold? This is one indicator that it is time, or it is an indicator that should consider silver over gold. And let me see, featured products here again, 1,000 ounce LBMA bars, 100 gram gold bars. For your precious metals, we do have them here, and you can either You can either come down and take it home, or you can either put it in storage with us at the safe house. For instance, these 1,000-ounce LBMA bars, there are 6 in the shop, which you can come down and take home. If you're a strong guy and you want to do it, you can do it. Or you can store it in our vault here. We have 363 bars in the vault available for you to own. You own it. This is not some type of a pooled allocated or unallocated deal. This is the real deal. You own it. It is yours. There's going to be a bar in your name that you will own. And to do that, you would have to sign up as a Silver Bullion user, whether it be a personal account, just you alone, joint account, perhaps you and your spouse, trust account, joint account with the minor, a business account, and a retirement account, such as a precious metals 401k. And a lot of guys, they went into a Bitcoin type of IRA. They're hurting right now. They're absolutely hurting. Precious metals IRAs, they've been holding up pretty well. So this may be something you want to take a look at. Very simple information, at least for a personal account, where all you basically need is just a form of an ID, fill out the application, simple information such as your country preferred currency, things like that. And again, how did you find out about us? So if you want to create an account, go ahead and type in YouTube SBTV. Give us a call or email. We'll help you through it. We'll walk you through it. And again, I would suggest that you go ahead and take this box here. Basically, it means if you get an email from us, all it is a notification. We don't put anything in the body of the email. So that way, Google, Yahoo, all these guys, nobody can see it. It's just between you and us. So this is a good choice here. You get an email saying you have a notification from us, then you will log into your account to read your message from us. So that's how it works. So let me take a quick look at Twitter, see what's going on in the Twitter sphere here. I bookmarked a few things. Peter Schiff, thanks to easy money and high taxes, Americans failed to save for retirement. Well, this is what we just talked about. Failed to save for their retirement. Now they're going for broke by betting what little they do have saved on Bitcoin. Long shot. Yeah, so it's kind of what's happening right now. Half of Bitcoin's IRA user base is 55 and up. I mean, it sounds skewed, but I mean, the fact is, let's not forget 55. This is a retirement account. So yes, people are going to be older. So half of Bitcoin's IRA's user base is 55 and up, while over 3/4 of its 100,000 users are over 45. So taking a gamble later on while you're up in age, I mean, some guys may go for it. Other guys, they may want something a bit more sure and stable. Let's see what else is out there. Let's see, David Morgan. If Bitcoin had worked as Nakamoto proposed, no crypto elite would have emerged at all. And that's fairly true, because the concept of a decentralized type of a money was that it wouldn't be controlled, and it's kind of getting there. We hear the stories of whales and things like that, memes where people can just say a word or two and they're going to push the price. And from everything we've been told, this was not the intent of what Bitcoin was supposed to have been. So it is definitely changing. This article from medium.com says the crypto movement is destroying itself. So that's an interesting opinion as well. Business Insider, if we all agreed to buy less stuff, we could be happier and work fewer hours. That's what it's coming down to, I suppose. Don't buy too many things. That's, I guess, is what they're trying to say. And, we do have a lot of shipping containers that are backed up at ports. So on the demand side, there is demand. On the supply side is still pretty much problematic. Let's see. Zero hedge, general labor strike planned across the U.S. I don't know anything about this. If you guys know something about it, go ahead and feel free to put what you know about it in the comments section. Zero hedge, general labor strike planned across the U.S. Let me see. If we cannot live, we will not work. Let's see. General strike. So if you know anything about that, please go ahead and put it in the comments section. Stuart A. Brown, if the Fed could actually do something about inflation, it would have already done it. The reason they haven't done it is because they can't. And because they can't fight inflation, that's why they have to pretend that it's transitory. That's why they have to pretend that it's transitory. I mean, there's just a lot of talk about inflation out there, and that is what we're going to take a look at in the main topic where Jay Powell was giving his testimony. And we'll go ahead and look at what the pundits had to say. So let me take a quick look at your comments section there. So, that'll be pretty much the end of the Twitter segment. Let me just see the comments. Okay, let's see. Yeah, if you want to link to that website, that silver to gold ratio, go ahead and type in silverbullion.com.sg gold silver ratio, and it's actually a tool. You can go ahead and put in your own numbers and see what would happen, or when the right time for you might be to switch back and forth between gold and silver. So go ahead and go to the website, type in your own numbers, or put in your own data, and see what you get. It's different for all of us. That's for sure. Okay, Tweety Bird. Yes, silver is purdy. Yes, yes, it is. Okay, so let's see. Pablo Pina vault fee. That can be found on our charges page, on our fee schedule as well. Maybe Vincent can, if you want, you can go ahead and you can put the link, or either the fees, the charges for the vault. Um, my own belief is, if you're not being charged, this is just my belief. Don't take it as something set in stone. But if you have anything in storage, whether it's tokens, gold, silver, if they're not charging you a fee to store something, it may mean because they aren't storing anything for you that is dedicated in your name. It's just my belief. It's just what I've kind of seen through time. So always make sure when you store something, it's definitely in your name. You do have something, serial number, something to identify it to you, especially when it comes to gold and silver, physical bars, even coins. There are ways to physically attach a unique identification number to you as an owner of that specific bar or coin or monster box, whatever it is. So always, um, you know, make sure that your vault is giving you that type of a dedicated type of a serial number or identification there. Okay, so moving on. That was basically a look at Twitter. So I want to get into the main topic of the day, Powell's stand. Last week, Fed head Jerome Powell spoke before Congress. What did he say? Well, we all know what he's going to say without him even saying anything. But what did he say? What did he mean is our topic of the day. And what I'm going to do, and usually I'll play his clips and then break it down. What I'm going to do is just see what pundits had to say, and if they make sense, if we agree with them, if we don't, and because they are the ones that are giving out the info to you and me, and we're supposed to basically believe what they say or take their opinion or weigh their opinion pretty heavily. So I want to take a look at what the pundits had to say after Jerome Powell gave his testimony. So here we go.
Yes, Powell is before the House Financial Services Committee today. There it is, 8:30. And he will tell them that the Fed will maintain the current funds rate target until employment and inflation reach the Fed's goals. He is not giving much here in the wake of those higher inflation numbers yesterday. So the Fed will alter policy only if inflation is persistently and materially on a higher path there. So we'll continue to monitor the implications of incoming information for the economic outlook, and would be prepared to adjust the stance of policy if we saw signs the path of inflation or longer-term inflation expectations were moving materially and persistently beyond levels consistent with our goal. He says on the issue of asset purchases, substantial further progress is, quote, still a ways off, and the Fed will continue discussion of asset purchases at upcoming meetings. It will provide any advance notice of changes in asset purchases. On the issue of inflation, we'll get to Rick in just a second. Just want to say that the Fed chairman says inflation has increased notably and will likely remain elevated in coming months before moderating. That's the Fed's expectations. He says inflation has been boosted by base effects, strong demand in sectors that have experienced bottlenecks, and inflation expectations, he says, so far are in a range consistent with the Fed's goals. I'll come back later with what he says about the labor market.
Okay, so Powell is not ready to pull the trigger. By pulling the trigger, he's still holding that transitory line, still on the fence. He's not going to go one way or the other. He needs to see more and consistently see more. But I mean, what do you think he's waiting for? I mean, what numbers do you think he needs to see? And when he does get those numbers, I mean, do you think the Fed is even going to be able to control inflation? I mean, I'm even on the record for saying, if the Fed couldn't get the inflation they wanted for a decade now, when they do get it, what makes them think that they can control it? They tried so hard to get it, couldn't get it. So if they do get it, will they be able to control it? So, again, we'll see how this unfolds. But in the meantime, let me show you this. Head over to this website real quick. Just read a few things on it. Let's see. Get this out of the way. Gold firms after U.S. CPI surge, strong dollar limits gains. So that's one thing holding gold and silver down right now is a bit of a stronger dollar. So gold edged higher on Tuesday following data showing U.S. consumer prices rose by the most in 13 years last month, though an advancing dollar kept the metal confined to a tight range. Spot gold was up 0.3% at 18,012.05 per ounce, and U.S. gold futures rose 0.4% to 1813. Let me just get past to this part. The closely watched U.S. Consumer Price Index, or CPI, increased 0.9% last month, the largest gain since 2008, and that compares with a forecast for overall CPI to rise 0.5% by economists polled by Reuters. And analysts said the data was unlikely to trigger a swift monetary policy tightening response from the Fed. Okay, so analysts said the data was unlikely to trigger a swift monetary policy tightening response from the Fed, providing some support to the non-yielding metal. Okay, let me play another clip from the pundits.
You know what? Used car prices are soaring. Do I need to worry about that in 3 months? Or what's the real inflation worry?
I think that Chair Powell did a great job of explaining the dynamics today, in that we've got a unique experience of reopening the economy after a medically induced coma, and the demand side is coming on much faster and much stronger than the supply side. That is what's going on. The demand side is stronger than horseradish, and the supply side has got to catch up. And what Jay was communicating today is he believes in a dynamic U.S. economy, and that the supply side will adjust, in part related to the huge profit opportunities associated with the elevated pricing, and this will sort itself out. Therefore, he looks at the inflationary pressures as temporary.
Yeah.
And he believes that firmly. At the same time, he's also humble in that there are a lot of things that we don't know about this economy post-pandemic. So he has a base case scenario, and then he is in risk management mode. And the most interesting thing he said today to me is this is going to be transitory one way or the other, either organically because the supply side adjusts in a nice, efficient way, or 6 months out or so, they'll have to lean against the demand side of the economy. So it's going to be transitory. It's just a matter of whether or not it's going to be the easy way or the hard way.
Okay, so it's going to be transitory. It's just a matter of if it's going to be the easy way or the hard way. That's if it's transitory. Nonetheless, this is true. The supply side is lagging. It is lagging behind the demand side. So Powell believes inflation is transitory. Still, I disagree. Surprise. Surprise, surprise. Price inflation is a result, and it is just 1 degree in what I call a 360-degree disaster. And I'll give you an example of why, because there are so many different points of inflation to think that just one or two things will control all of these points. Entirely wrong. Entirely wrong to think so. But let me give you one example why right now. Wage inflation. To get people back to work, you're going to have to pay them more. You're going to have to pay them more. Inflation. Okay, wage inflation. Employers are going to have to pay them more. Result, you still have that increased money supply through wages chasing a finite population of products. So you and I, we get paid more, but there's still not many things we can buy. There's still delays. Oh, you want to buy something? Well, you got to wait a month or two before it can come in. I mean, there's still a delay there. So, again, that supply is a key part of the equation. And again, the supply side, if you can't bring in more products and you don't make them anymore because you basically decided you're going to let someone else manufacture everything, so you don't make them anymore, and now you're enticing people to come back to work with higher salaries, it'll only get worse. And frankly speaking, the U.S. is not in control of the supply side. Okay, you see, whether or not we know it, Fed, they're losing control, if not lost control. And the U.S. government is losing control as well, especially when it comes again to the supply side of inflation and the supply chain. I mean, hey, what if I know I hold all the cards and decide to limit how much goods I'll allocate or sell to your country? Let's say I create some type of government policy. Well, we will only allow X amount of products or goods exit the country or exit our plant or factory, whatever it is, destined for the U.S. I mean, what if you said that? I mean, trade war, right? I mean, let's not think this couldn't happen. This could be part of some type of a trade war deal. I mean, if you're also paying me in a currency I don't want, you're going to need to pay me in something else or more of your currency because I'm taking a risk. I might not want your currency. What I'm saying is supply is something the U.S. cannot control. Okay, and the currency it uses to buy supplies is out of control. Okay, cannot control, out of control. Extremely, extremely dangerous once we understand this metric. And to reiterate this wage inflation, I'll play another clip. But keep in mind, you can cut interest rates or do whatever you want. Still also comes down to that supply side. But here's another point on wage inflation.
Let's bring in Chris Grisanti. He's the chief equity strategist for MAI Capital Management. Jeff Krempelman is also with us. He's the chief investment strategist at Mariner Wealth Advisors. Welcome to you both. Chris, I think of the kind of point of view, unlike Mary Daly, that inflation pressures will be with us for some time.
I do. Yes, I do think that's right. And it's nice to be with you again, Kelly. But what I think, I agree with her in one sense, which is I don't think it's commodity inflation that's going to get us. I think there are one-time things like trucks and cars and gas. But I do think wage inflation is going to be the 800-pound gorilla that really, as we enter 2022, that will be what the headlines are about. And it's much more pernicious because commodities go up and down, as we all know. Wages really go in only one direction. You give a 5% raise one year, you can't really dial it back the following year. So that's what I'm on the lookout for, and that's what I think will drive interest rates higher next year as well.
I take your point, Chris, although I'm curious what's going to happen come Labor Day, because if you have all of a sudden a flood of new entrants to the labor market who generally have lower wage jobs, I mean, that's why we saw average wages go up during the pandemic, was just that mix effect. So I know what you're saying. For an individual person, it's unlikely their wages would go down, though of course it still happens. People reset all the time. But for society at large, you can definitely see downward wage pressures.
Well, the problem there is that we see many job openings in almost all of our portfolio companies that are much higher, for example, than the current unemployment benefits. So I really think that this excuse that there's all these folks sitting on the sidelines waiting, but is not going to turn out to be true. But of course, the proof's in the pudding, and we'll see in a couple of months.
Okay, so this is why you all know I have said if the Fed could not take away the punch bowl from Wall Street, what makes them think they can take it away from Main Street? I mean, will Main Street be forced to go back to work for less than staying home? I mean, stay home, you make more money. Going to work, you make less money. What would you do? So there's going to come to a point where your government, local government, whichever it may be, state government, federal government, they're going to find a way to get you back to work. And, whether it's going to be cutting benefits or whatever it is, they will find a way to get you back to work. So I'm just looking at the comments out there. Pretty interesting comments. Thing is, what he said was true. I mean, someone making, let's say, $20 an hour, and then the employer telling them, we're going to take you down to 18 or whatever it is. Okay, that's rough. I mean, wages to come down, it's much harder to do. Well, actually, probably for an employer, for wages to go up, it's much harder to do. But when you look at the base right now, the base being, does a person make more staying home, or will he make more by going to work? They're going to have to find ways to get you back to work. And will an employer be able to pay you more to get you back to work? Hard to say. Again, you got the whole supply side issue. Okay, so, how does a business plan? How does the business plan or project sales when he doesn't even know when his supplies are going to come in? The supplies may be a different price from when he ordered. So, there is a lot more tied into this. So, more punditry.
Well, everything's transitory. It's like Stephen Wright once said, the comedian, everything's within walking distance if you have the time. But, I mean, this is a dangerous game in a way that Powell is playing, Paul, because, and by the way, your condiment puns need work. They don't cut the mustard. Let's talk about this. You watch the Tour de France. I watch it almost every day, by the way, NBC Sports. And there's always this guy that goes for a breakaway. And he's pedaling his heart out. And inevitably, the pack catches up to him. But occasionally, they don't. And Powell is kind of playing that game. He's assuming that guy that breaks out is inflation. But eventually, that guy's going to burn out, and the pack, if you will catch up. That's the transitory nature. But what happens if it doesn't? Does the Fed have to react strongly?
I think it will need to react in that scenario, but I would take issue with the notion of strongly. We're at incredibly low interest rates, incredibly high valuations for all assets. Put differently, we have incredibly easy financial conditions. So for the real economy, he can lean against financial conditions and Wall Street will cry pain. But the economy is fundamentally very strong and not as sensitive now in a post-COVID world.
Okay, so the Fed will try to lean on Wall Street, one more time, aka remove the punch bowl, taper, perhaps. Can they do it? Can they do it? But more importantly, is your household doing better, and is it back to normal as far as employment goes? Is your job even still there? And what if this isn't transitory? And I'm looking at the comments, and I see some of you folks are saying how employment's going to be tied into getting a vaccine or a vaccine card or things like that. And it's hard to disagree with that at this point. How a country like the U.S. will handle that is we'll see how it plays out. I mean, there are a lot of other factors that can go into it, but it does seem like you see it more and more where there's division in so many things and in so many ways, and one of them, of course, on a lighter note, is Powell saying if this inflation is transitory or not. But what if it's not? What if it's not transitory? Let's see what the pundits have to say about that.
What's the Fed going to do longer term if inflation does not cool off? Is there a taper tantrum? Is there a rapid rise in 10-year yields based on Dan's charts? And if so, what does that do to technology, which, as we know, loves low rates?
Is that to me?
Yes.
So just to pick up on your cyclist analogy, maybe the guy who sprints out to the head of the pack is doping and he's got the ability to stay there. It's not natural, but maybe that exists, just to further the analogy. But I think I break it down tech into two parts. I think of the Google, the value, the FMAGA complex is much more value than the IGV stocks, the Zoom, the CrowdStrike, the Salesforce, Palantir, Snowflake, those kind of names. So I think those are far more sensitive to rates.
Yep.
So I'm more comfortable sticking with the FMAGA.
Well, maybe the doping is just artificially low rates for a long time. Sven Henrik and others might argue that. Tim, we got Paul back. I don't know if he heard your question, so why don't you just re-ask it again?
I will tee it up again, Paul. And so I think your view is that Powell wants to guide financial markets, which you're talking about. That's where the concern is, that on tapering well before he actually has to do it. And this would be unlike what happened in 2013. I feel like Powell actually went out there and was hawkish on the Fed meeting a month ago and has done everything he can to reverse off of that stance. Why is he trying to sound more dovish, it seems to me, after establishing the beginning of that trend you're looking for?
I think he's established they're going to be tapering by the end of this year, and they're going to be making the announcement, probably at Jackson Hole or sometime around that time, and then they will start it in the first part of the year. I think he wants the exact opposite of what happened in 2013, because he was kind of on the wrong side of that trade, and he wants the market to have fully discounted tapering before it starts. And I think he started that process with the last FOMC meeting, and the market has been incredibly friendly since then. So he wants tapering when it happens to be a non-event. If he wanted to lean against this economy, it wouldn't be with respect to tapering. It would be raising more questions, if you will, about the transitory inflation thesis. And he categorically was not doing that. So I separate the whole issue of tapering, which I think he's got a great handle on, and the market has fully discounted it's going to happen 6 months or so from now. And the real issue is on the inflation side of things. So I think you need to look at them in two different ways.
Yeah, and like a couple of you, I have never heard that word before when she said the F-mega complex. I also never knew that existed. Powell wants to guide markets and taper by the end of the year. He does plan to pull the punch bowl away. That's what it looks. It is what it looks like. But again, if rates are going to rise or tapering, then we should see more attraction to physical gold, right? We should see more attraction to physical gold. And not financial advice, professional or otherwise. I'm just sharing my thoughts. Okay, and I'll play another clip on the taper, but it is, you really gotta wonder, what's going on, because I think for a lot of us out there, what we see on financial news networks and things like that, very, very disconnected from our daily reality. It almost seems like, what am I watching this guy for? He makes no sense to me because my world doesn't show these things for some of us, and then for others, it's absolutely in line with what they believe. So, again, the division is just incredible. And but nonetheless, the common denominator is there is going to be financial economic woes, and again, things like gold and silver, stores of wealth, vehicles to transfer wealth. This is one thing that I think we all come back to, no matter what we believe. As far as the what's going on with the Fed and whatnot. I think we all can come back to that common denominator. So moving on, one more clip. Another clip about this taper that you're talking about.
2013, let's not forget what happened. Ben Bernanke just basically came out and said, we're going to start cutting our bond purchases. That caused the taper tantrum that our long-term viewers remember very well. The stock market didn't react a lot, but bond yields did. I think, to Paul's point, tell us if you agree or disagree, he is trying to beat us over the head so much with this that when it finally occurs, no one's even going to blink. Can he pull that off?
Well, I think what Tim was trying to get at was that the Fed chair has been clear as mud, if you will, over the last couple of months here. It hasn't actually been that clear that they are going to taper in Q4, and it's not clear to me that that's at all discounted. Now, you could say if that was the case, then maybe rates are where they should be if it's discounted. But I go back to, you know, when we started tapering in 14 or 15 or whatever, it just took a long time for those numbers to come down dramatically, and it came a long time that we got off of ZIRP. So I think there's going to continue to be fits and starts here. I will just say this: the fear that, you know, this medically induced coma, as Paul just mentioned, that we had over the last year, the fact that we think that there's just going to be these inherent inflation that's just going to stick. And so I just don't understand where the last 20 years that there's any evidence that that's going to happen. And I go back to what Guy started out saying by the deflationary factors that have been in play because of technology, so seeping into every industry. So I just suspect that in a year or so, we're going to have these supply constraints and these bottlenecks, as Jay Powell calls them, fixed. And we're going to get back to worrying about inflation not being high enough.
Okay, and here's former Treasury Secretary Head Steve Mnuchin.
Well, let me just be clear. We have a great democracy. It's working. It worked. We had a transition of power. I hope the president considers running again down the road. I think this is an extraordinary democracy. And as you said, we have an extraordinary economy. And I couldn't be more proud of the way we worked with the House and the Senate. Had we not passed those bills, I think we would have had a great depression, not a great recession. And we're seeing one of the greatest rebounds we've ever seen.
Treasury Secretary Mnuchin, we just spoke with Larry Fink. He watches the markets very closely. I know you do, too. He said that he doesn't agree with the Fed, that he does not think inflation is transitory. What do you think?
Right. I just saw Larry on, and I was going to actually comment. I agree with Larry. And notwithstanding my close friend, Jay Powell, who I have a lot of admiration for, and I think he's done a great job as Fed chair, I respectfully disagree with him on his not being concerned. We've seen inflation numbers. They're in the 4.5% to 5.5% range. I think the Fed's policy of going over 2% inflation made sense before COVID. But as I've said, you know, the Treasury models, the Fed models can't really predict what happens after this massive amount of fiscal and monetary response. And I think it's important for the Fed to make sure they get ahead of the curve so that we don't end up with 4 or 5% interest rates, which would really slow down this recovery.
Would that mean you'd like to see them start trimming asset purchases immediately?
I would. I think that these asset purchases, particularly in the mortgage area, were important last year. I think these are very, very functioning markets. There's lots of liquidity. And I think the Fed has to normalize. It's just a question of how fast and how far.
Okay, so hey, the pundits say it's not a big deal. Go ahead and taper. Mnuchin says yes, lessen the asset purchases, talking about perhaps things like the mortgage-backed securities, buying treasuries, things like that. But we know what happened last time. With the history of the taper tantrum, tell you what, again, for me, this screams continue to buy gold and silver, continue to accumulate. I mean, if something happens, hey, I have my insurance. You'd have yours as well. Nothing happens, you can always liquidate it. And that's one of the better things with gold and silver. It's an investment / insurance. That insurance, half of it seems to be growing more and more. It is an investment and an insurance. And let me go show you one more thing that Powell said, and I'll go to a website for this. Powell had said that a Fed digital currency could undercut the need for cryptocurrencies. Okay, it's not my words, it's Jerome Powell. This is what he said, according to Yahoo Finance, July 15, 2021. Okay, so this is what's coming from Yahoo. So Federal Reserve Chair Jerome Powell on Wednesday said one of the stronger arguments for the U.S. Central Bank to set up a digital currency is that it could undercut the need for private alternatives such as cryptocurrencies. And he even mentioned stablecoins. So also during the congressional hearing, if having a digital currency issued by the Fed would be more viable alternative than having multiple cryptocurrencies or stablecoins emerge in the payment system? Powell said he agreed. A stablecoin is a cryptocurrency that attempts to peg its value to a conventional currency such as the US dollar. Now I think that may be the case, and I think that's one of the arguments that are offered in favor of digital currency. So Powell said during a hearing before the US House of Representatives Financial Services Committee that in particular you would not need stablecoins, you wouldn't need cryptocurrencies if you had a digital currency. I think that's one of the stronger arguments in its favor. Okay, let me come back here. If the Fed says you don't need it, go and get it. Go and get it. If they're telling you you don't need something, go ahead and get it. And when it comes to stable coins, I have a differing opinion with that. I mean, I think there are very, very valid reasons why you may want to get maybe not necessarily a stable coin per se, but things that are backed. Perhaps even like a gold backed token. And I'll touch on that in just a bit. But if the Fed says you don't need it, you're probably going to need it. It's all about options. But one more thing he had to say on crypto here. So he says they won't be needed once the U.S. has a digital currency. And I bet that your fiat, your paper money is not going to be needed as well once they get this thing in play. So Fed Chair Jerome Powell challenged the need for cryptos if and when plans for a U.S. digital currency comes to fruition. You would not need cryptocurrencies if you had a digital U.S. currency. And basically, it's what they're saying. It's basically what they're saying right now. So what do cryptocurrency holders do? I mean, when you hear something like this, and when you see Yellen, saying, negative things about cryptocurrencies, when you're seeing what governments are doing, what do? If you're a holder of cryptocurrency? That's my question to you out there. But I will say this. Again, for a backed token, especially a gold-backed token, silver-backed, commodity-backed tokens, a token that may have monetary value, barterability, type of barter value, I would be looking at these types of things. Now, why? I mean, Jay Powell just said we wouldn't need them. Well, for me, I still want that option. I mean, I want the option where if my gold, my silver is at location A, physical gold, physical silver is at location A, and I need to go to location B, and I can't take my metals with me for whatever reasons, then a gold-backed token would be my option. I mean, imagine you buy physical gold. Imagine, it's transformed digitally. There is physical there still. You own X amount of grams and a purity of gold. It is there. And you move, let's say, from, I don't know, New York to Singapore, whatever it is, Singapore to the States, whatever it is. And maybe you don't want to take your gold and silver with you. You can always have it stored in one location, and then you can retrieve it or redeem it in a different location. Now, have you had physical, you don't or may not necessarily have that option to move it with you. So there is a value to having a type of a gold-backed token, for sure. And I'm just going to say this, for me anyway, it's cash gold token. I mean, just take a look at it. Take a look at Cash Gold Token. And disclaimer here, I do have a micro-sharing cash. But if you'd like more info, just send us an email, sales@silverbullion.com.sg. And again, this is because it's all about options. I want an option where if I'm here today and I may be somewhere else tomorrow, I would like my gold and silver to be there, to meet me there, or for me to redeem it there. So it is an option. This isn't to say it's a cryptocurrency. This is gold that is something different. And I think I froze there for a minute. So anyway, let me continue on. One last thing to talk about. We keep hearing about these reverse repos, and we try to understand what are reverse repos, because they are growing more and more. I mean, 700 billion reverse repo day has become the norm. I think we're going to see 800 billion, and I think eventually we're going to have $1 trillion repo day become the norm. So let me make this a little bit larger here, just so we all can get on the same page. U.S. debt ceiling comes back into effect at the end of July. Okay, so this is really coming soon, and it's going to put pressure on the Treasury to reduce its cash balance ahead of the deadline, and that means more injections of cash into a financial system already swimming with liquidity, potentially sinking short-term rates and causing undue distortion in the money markets. So on Wednesday last week, nearly $1 trillion in cash, a record high, gushed into the Federal Reserve's reverse repo facility. Let me just see if I can get down to this part here. Okay, let me see. Basically, what they're doing is trying to find that part if I can find it. Basically, they're just trying to put a floor. Okay, they really don't want things to go negative, and so they're trying to put a floor here. Is what they're trying to do. Let's see. Yeah, can't seem to find that part of it, but anyway, it is something we're going to need to keep an eye on, because I think we're really headed toward that $1 trillion reverse repo day, and who knows, it may become the norm. So we'll see what happens. We'll see what happens with the debt ceiling, what they're going to do with it. Okay, so anyway, I know we touched on a lot of stuff, but that's going to wrap up the main topic section. I just want to take a look at your comments here. Mr. Nguyen, yes, everyone is fed up with everything. Everyone does seem to be fed up with everything. Matt, yes, and the Fed. Mark Hill, and the Fed. Yeah, and the Fed. And the Fed, yes, absolutely. Let's see, 1913, where'd it go? 1913 reset is a must. 1913 referring to when the Fed came into existence with the help of President Woodrow Wilson, who later on, shortly before he died, was saying that basically it was a mistake, that he shouldn't have done that. So head over to the commentary section. Yes, we were all over the place today, a lot of different topics to touch on. But the point being, we need to keep our head on a swivel. Okay, so many things, we got to be looking 360 right now, and things happen quick, and most likely never to our agreement, never to our timing. Okay, keep that in mind. They happen quick, never to our agreement, never to our timing. We have a good idea, though, what will happen, but we just don't know when, right? We don't know when it's going to happen. Find people, places, things you trust, companies you trust, sources you trust, from health to wealth. And there will be opportunities that will come no matter how difficult things might be ahead. There are going to be opportunities. Never forget that, which is why we have to have options, okay? So going to be opportunities and options that you can create for yourself. If you need help with that, if you would like to know what options might fit your particular situation regarding precious metals, give us a call, email us. We might be able to work something out, with you, or find a solution for you. Now, even though I might work for a bullion dealer, as you folks know, I'm in the same boat as each of you. Nothing special here. I am in that same boat with all of you. I'm just sharing my thoughts from what I hear customers tell me, my thoughts from when, we're going ahead and doing research. And I'm no different. I'm in the same boat as you. And I'm just trying to share what some options and solutions are that other people are doing. Okay, so that will pretty much end the commentary section, and that'll end this this live stream. So I just want to see what's out there as far as comments go. American Rebel, appreciate that. Thank you for being here and for your support. 124 thumbs up, appreciate that. Appreciate more also if they come in before we wrap up. But again, thank you for being here. We got to be that blessing, not that burden. Again, we all know what's happening, and we may be preaching to the choir sometimes, but hopefully there are new people that walk in the door. If some of you are new here and maybe you're just starting to hear things, gold and silver, inflation, transitory, all of these things. You look at the comments, what people had to say. And again, I always say this, your comments mean more than anything I could ever say to anyone, because people want to see what other people are doing, what other people are thinking. And hopefully that's something that I try to bring to the table as well, same as all of you. So again, appreciate you all being here. Let me see. JM, I'm not going to put that up because we just might jinx it. What the heck? Let's jinx it. See what happens. Anyway, I appreciate you guys from being here. Joey from Seattle, how you doing? Pablo Pina, John Palmer. Yeah. And the PM price fixing, it's getting more and more obvious, as said. When the CFTC says, we got to tamp it down. Come on. Okay. I think we all know what's going on here. Okay. Mark Hill. Yeah, there's some pretty good food here. I'll tell you that. Good diversity of food. Okay, and we finally got a thumbs down. So thank you for that. That makes it official. Now we can wrap it up. We can't leave unless we get that thumbs down, right? So Ken, thank you for the thumbs up. Thumbs downs, appreciate it. Michael Sarah, thanks for being here. The MiG-26. Again, as always, saddle up for what's coming ahead and silver up as well. Got to be prepared. Got to have those options. I'll see you guys next week. Take care.